Hi, everybody. It's Stacey and Alex from Saltivation. Welcome back to another episode. And today, and welcome to 2024, right? And so today, and many of you are aware that we put out a top 10 list every year. And so today we're going to go through our top 10 list at a high level so that you get a feel for the things that we think are going to be of importance in state and local tax this year. Alex, you want to start us?
Happy to. Yeah, we spent a little time debating this list, and there's a lot of things that didn't make it that we can still be concerned about. But without further ado, number one is the broad state revenue grab continues. We anticipate in 2024 new tax types and expanded tax bases as the states continue to find new ways to generate revenue. Just as a couple of examples, we're still looking at the Maryland ad tax, the digital advertising tax, more specifically. A lot of drama over the last couple of years surrounding that tax. Still litigation on the horizon, so it's not completely dead. Then another example would be the retail delivery fees that we're seeing continue in Colorado. In fact, the rate increased in Colorado. And the new one taking effect in Minnesota with a relatively high rate as well. So just two examples of that. There are more that we will probably have another video on at some point later.
Right. All right. Number two, income tax exposure grows with Public Law 86272 modernization. So many of you are probably aware that the Multi-State Tax Commission put out a modernization or guidance to modernize Public Law 86272 back in 2021. And we have seen some states, particularly California, they jumped on the bandwagon very early. And if anybody's heard of the ACMA case, just recently, actually, the ACMA won, which seems great for a taxpayer win because that modernization really, the Multi-State Tax Commission basically said, hey, we thought that, we've always had this interpretation. We're just bringing this forward into the 21st century, saying that, certain interactive website activities would then exceed Public Law 86272. The ACMA brought the case in California and won, but it really is more of a procedural win for the ACMA and, for California taxpayers in general, because basically it was procedural in nature, like I said, where they did not go through the proper channels in order to pass their regulations. So we will probably see changes to California statutes in the future, my guess, as well as we've also seen the state of New Jersey actually pass it in September of 2023. So stay tuned. We shall see probably more states jump on that bandwagon, and we might see where Public Law 86272 is virtually eviscerated. So we hope that that's not the case, but just stay tuned. Moving right along.
And at number three, we are focusing on the locals. We're seeing some streamlined local tax administration. The elephant in the room is always Colorado. We're familiar with the SUT system that they've been working on the last couple of years. As I understand it, almost all of the home rule jurisdictions in Colorado are now part of the SUT system. I think
Right.
there's
We
only
have two holdouts so
two
far.
holdouts.
Yep.
Stacey.
As of today.
As of today, two holdouts. So we have critical mass, and at this point, it's becoming, practically speaking, more and more difficult to argue against what the locals are doing together in Colorado. So anyway, so that's something that we're still watching and working through. Alaska obviously has the ARSSTC, Alaska Remote Sales Tax Commission, or something along those lines. I'm sorry if I butchered that from memory. That is similar to what's going on in Colorado. The locals banded together. Obviously, at the state level, Alaska does not have a general sales tax, but the locals banded together, formed this commission, and are now collectively enforcing at the commission level in aggregate, and they grew teeth effective 1/1/23. So they've had one full year at this point. And then, as always, activity in Alabama, Louisiana, Arizona. We're always on the lookout for changes there.
Agreed. And just as a side note, in Colorado, we just had another home rule city get added. The city of Keystone, for those skiers out there, Keystone has not been a home rule city, but it is now. So welcome to 2024. Okay, moving right along. Number 4, transaction activity and SALT implications. This is really not anything new, to be honest. I think we continue to see M&A activity, and so this is not, something that's going to be a surprise to anybody, but we are seeing more and more M&A activity. I think where we as a SALT team sometimes see this a little bit more bubble up is in due diligence, as well as we might be pulled into due diligence, and or there are due diligence reports that come out that state and local tax is a material issue. And so then it becomes, okay, what is a target going to do with that information? What is a purchaser going to do with that information? And then remediation is usually a piece of that, which we get involved in. And I can tell you from experience of explaining some of the transactions to our voluntary disclosure agents can be a little bit, they get it, but there could be some procedures that they have that requires additional or multiple VDA agreements, et cetera. And so while we see this activity, there's SALT implications, there's also administrative issues that come along with that, particularly when it comes to remediation in a due diligence setting. Anything to add there, Alex?
No, you got it.
Okay. All right. Moving right
All right. Moving along. And at number 5, we have a case coming out of North Carolina regarding some potential negligence and malpractice by a CPA firm. Now, this is not a new issue, right? There's always been litigation around this, but this is just a relatively high-profile case that has caught our attention recently and has caught the industry's attention, and it serves as a reminder that there is an incredible amount of specialization that happens even within this specialty. I think we are all students of tax and can spend a lifetime learning and practicing and potentially not know everything there is to know. So unfortunately, in this case, we have a North Carolina-based online retailer who is operating called Vista Horticultural. I can't say it. They're operating as Eden Brothers, and they lodged a complaint against their CPA firm called Johnson Price Sprinkle PA PPLC PLLC against for negligence for not informing them of their economic nexus related exposure stemming from the Wayfair case. So from 2018. So we're watching that, and it's just a reminder that there's a lot to know.
Right. Agreed. And I think it also is a reminder for making sure that taxpayers hire the right practitioners to help them with their state and local tax. It's a very specialized area, as we know as practitioners in it, but as a buyer, sometimes taxpayers don't fully understand the nuances and or how important it is to hire somebody who specializes in state and local tax. All right. Moving along. We are now going to number 6. Choosing the right sales tax automation. One of the things that our saltivation team does, maybe more so than other maybe salt practitioners, honestly, that we know and have worked with over time, is help our clients navigate putting their sales tax processes in place. And that usually includes some kind of software automation for rates and rules, as we like to call them, because there are thousands of sales tax rates out there. As we've talked about, obviously, even the state of Colorado has its own nuances with state and locals. But every state has state and locals. They just might be reported on one form. They could be reported on multiple forms. And
Yeah, depending on how you measure, it's somewhere between 8,000 and 14,000 taxing jurisdictions in
right,
this country, was just madness.
right. It is a staggering number. And so imagine trying to manage 8,000 to 14,000 jurisdictions rates manually. It's impossible. And so automation really is key. It can be expensive, but that's really where we feel like we add a lot of value for our clients, is to help them navigate all the different automation options that are out there, what's best for their system, and then kind of what's best for them long term. And we also are very adept in getting them set up so that we can also set up the system and then set up our clients for success. There are a lot of different automation tools out there. There are multiple tools that come online monthly, could be more than monthly. So we try to stay on top of that, and we try to help our clients navigate all of the different options to dial in on what is the right one for them.
And that's it's great for the industry to have all these new options. We were on a partner call recently with one of the larger providers, who I won't name. But one of the executives presenting made a comment that I thought was incredibly accurate and uh, what's self-aware, I guess. The comment was, all the low-hanging fruit at this point have been picked, which I think, you know, is an interesting window into their current industry view, and the competition that all these new players are providing, and we are forging relationships with all these newer companies as well, and learning their strengths and weaknesses, and to make us advise our clients to the best of our ability on the appropriateness of each one of these solutions to their business and current systems.
Okay. I'm going to take number 7 too, because this is the Moore case and potential SALT implications to the Moore case. Some of you may be familiar with this case. It is at the United States Supreme Court, and it is centered around, at a high level, a repatriation tax, which was a tax provision, a one-time tax provision in the TCJA. And so this was back in 2017. And it has to do with deemed dividends coming back into the US, and whether US shareholders would be subject to tax on what is considered a deemed dividend as opposed to realized monies. And why there might be other implications to this is that, again, this was a specific provision in the TCJA. And for those of you who might be familiar with some of the other foreign provisions that have been in the IRC for many years, this could have a trickle effect to something such as Subpart F. This is getting a little bit into the weeds with respect to income taxation. However, the SALT implications to that is that we have a lot of states for income tax purposes that have their own rules, whether there's some kind of dividends received deduction or something of that nature, when it comes to some of those other federal provisions that have been in place for many, many years. And so we're watching this case to see whether there are going to be further implications to those provisions from a federal perspective that have been in place for many years, because there will be that trickle down effect from an income tax perspective for the states.
It's fascinating. All right. Number 8, apportionment litigation galore. Uh, so I'm not sure that this one is really new either. It's just something that seems to crop up uh, frequently recently. But we're still, it's still an issue in 2024, so it is on our top 10 list of state and local tax issues. A couple of examples of what's going on with apportionment. We recently had a Supreme Court case in Minnesota called Cities Management. Without diving too far into the details, essentially, the case evaluated business and non-business income of a seller, and effectively with a lot of mixed facts. I don't want to spoil it because we're going to do another video on this, but but there was some unsporting conduct by the Department of Revenue in Minnesota. Let's just leave it at that. But setting that aside, the Supreme Court essentially upheld for the supposition that non-business income effectively just doesn't exist, practically speaking. That's not what they said, but that's the practical effect. And then we have changes, as Stacey mentioned earlier. We have changes in New Jersey as well with Public Law 86-72, and then them changing to Finnegan. So just a lot of activity. We're seeing a lot of activity across the states related to apportionment, and we expect that to continue throughout the year.
Indeed. All right, moving along. Number 9, post-COVID audit enforcement. So this isn't really maybe so post-COVID, although we are post-COVID. However, I think the takeaway here is that we are seeing states and locals with the resources getting out there, being more active with audit activity. Not a huge surprise. I think that, it's maybe not just related to COVID. We could also be seeing some of it being, we're almost 6 years post Wayfair. So there's a whole litany of reasons why, states might have more resources on hand and or be staffing up and or being more active. But just know that we are seeing more and more audit activity, whether it's income tax audits, whether it's sales tax audits, whether it's the states, whether it's locals. I happen to physically sit in Colorado, and we have a lot of home rules that are very busy reaching out to whether it's registered companies and or unregistered companies. And so they are very busy. And some of them have their own audit staff here in Colorado. Some of them use third parties. And so we see that also in other jurisdictions. So I think, just don't be surprised if you have somebody knocking on your door wanting to do an audit, whether it's full blown, whether it's desk, whether it's taking a look at 1 month of returns, et cetera. We're seeing all sorts of different flavors of that.
All right. And at number 10, last but not least, similar to the topic we had at number 6, it relates to automation. However, this is the non-sexy SALT administration element that we continue to see, and we expect to continue to be problematic. And more specifically, it's just the software setup and maintenance. A lot of these products are being marketed and sold as set it and forget it solutions, and they are wonderful solutions, but they are not that. So even with clients that have had third-party software engines implemented for whatever period of time. We are seeing Nexus setup inconsistencies. We are seeing filing calendar inconsistencies, mapping inconsistencies. This could be, you know, for a variety of reasons, right? It could be just lack of institutional knowledge as a result of turnover, acquisition activity. People internally are confused about who owns what in the maintenance of these systems. There's a lot of reasons that these systems can break down, but we are seeing quite a bit of it. And over time, small errors in the setup can snowball into rather large deficits, and even in some cases over collections and over remittances. So it is just, it is an area that I think needs continued vigilance to stay on top of, and to maintain.
Okay. That's our top 10, everybody. Thanks for joining, and stay tuned for some updates on some of these. We will be having, I'm sure we will be highlighting some of these issues further. As Alex alluded to, there are some Minnesota things that will be highlighted in another video down the road. So stay tuned for more information, and feel free to reach out to us at saltivation.com. Thanks.
Thanks for watching.